If you are a Palantir investor holding Palantir shares for long-term capital gains, you will be surprised to hear that Palantir insiders are selling their shares like there is no tomorrow. If we talk about just the last 10 trading days, we see that they sold Palantir shares on September 9th, September 10th, September 12th, September 13th, September 16th, and September 17th. On September 9th, at least 3 Palantir high officials or high-profile investors sold their shares. And on September 10th, at least 2 high officials or high-profile investors sold their shares. Unsurprisingly, they were led by Mr. Alex Karp, CEO of the company. Karp sold Palantir shares worth over $324 million. His average sell price was $36 per share, but the carnage began much earlier than that. The selling continued through $33 per share to a few cents over $39. Alex Karp began to unload his holdings in great numbers right after the price began to retreat from the recent swing high. He sold 246,000 shares on September 13th, 4.5 million shares on September 16th, and another 4.2 million shares on September 17th. You might wonder, what is going on here? Well, Palantir is a highly overvalued stock. If you care about some analysis, you will see that it has a book value of just $1.81. At that rate, its market cap was supposed to be only $4.14 billion, but it is now trading at $36.38 and has a market cap of $81 billion. This is a classic example of hype and speculation. Many investors will see their profit and capital disappear suddenly. Palantir's insiders understand this, and that's why we have such a huge number of insider transactions. The stock was hyped and overvalued even when it was $20 per share. Analyst after analyst over the last few quarters predicted that it was a highly overvalued stock. But overvalued stocks can be hyped too and made super overvalued. That is why we see the stock trading at this price level. It may be overvalued until it cannot sustain the valuation any longer. That is called a bust. I like this visualization of the Palantir stock by macro axis. They not only state that the stock is overvalued, they also attach to it different kinds of prices based on what you want to know as an investor. They give you the naive value of Palantir, which is $38.53, the hype value, $36.98, the target price, $14.25, and the real value, $26.85, against Palantir's current market price of $36.38. This image illustrates their valuation further. Another valuation of Palantir by Value Investing puts the fair price of Palantir at $8.99. They believe Palantir has a negative 75% upside from its current price of roughly $36. Pretty amazing, isn't it? Stock valuation website Trefis puts the stock's intrinsic value at $13. They consider Palantir very expensive at its current market price. They believe that the stock has an implied downside potential of 64%. That is better than Value Investing's 75% downside. Investment research and management services company Morningstar puts Palantir's fair value estimate at $19. This data is from the 11th of August, but it still reflects the fact that Palantir is terribly overvalued. Exactly how overvalued is Palantir? Let's look at its PE ratio to get an idea. Palantir's PE ratio is 214. The PE ratio is derived by dividing the price of a stock by the stock's earnings. One way of understanding Palantir's PE ratio is that given its current earnings, It would take 214 years of accumulated earnings to equal its current market cap of $81 billion. If you are a Palantir investor, what can you do in such a situation? Number 1. Follow Palantir insiders and sell your Palantir shares quickly, because the price may not stay above 35 for long. The insiders have information that you don't have. They would not have sold their shares so fast as they are doing now if they knew the price of the stock would rise further. This is not math. This is common sense. Number 2. Buy put options near the money, say $32, so that you have a backup in case the stock starts declining in value. But if you still believe Palantir has more upside, sell out-of-the-money covered calls at a $45 or $50 strike price so that you can catch the growth while earning some option premiums. If you don't know how to buy put options, check out this video I made a few weeks ago. If you don't know how to sell covered calls, check out this video on NVIDIA, where I suggested that investors put a collar against NVIDIA while it was trading at $140 per share. Ultimately, NVIDIA fell after the earnings call and lost over 25% within 2 weeks. Those who put a collar around NVIDIA benefited from my recommendation. You may do the same with Palantir or any high-flying stocks that grow surprisingly fast and are not supported by their intrinsic value. However, this is not financial advice. This is how I would treat my investment.